Welcome back to Crypto Learning Community. Today, I'm going to give you all the full breakdown on market structure. Okay, and unlike a lot of other people's videos, we're going to be looking at live candlesticks. Okay, and we're going to take the let's go ahead and just do this last swing push, this swing long that we've had. Right, we were in a downtrend and then we flipped bullish. So I'm going to teach y'all how fractal market structure works, right? How there's a bigger trend and then it progressively gets smaller. We'll start on the 4-hour time frame. We're just going to start off this this break of structure right here. We're not going to do any rules from the other side. Okay, so I'm going to show you all how to draw breaks of structure, some of the rules, how to use this to get into positions, and how to use this to have swings, how to move your stop loss. It all revolves around order flow, aka market structure, right? This stuff is really powerful. It should be the number one thing you learn before anything else. Definitely don't take it for granted, and get your roots in this, right? Spend a lot of time making this second nature. So let's start on the 4-hour. We just have a break of structure right here. We're going to go ahead and mark out all the breaks of structure going all the way up the fractal. Okay, false break, didn't close a body. You need a body close above these highs. Okay, see how I didn't do that there? Surprised it didn't come and take this low. But we did get a body close there. I want to see at least 2 bearish candles. We might have had something right here on another exchange. That's always a possibility. This is what I use. I use Bybit perpetuals for my I may use several charts, but this one I find a lot of consistencies with. Okay, we have a false break there. We had one here. A false break there. Alright, so that's our 4-hour market structure. Real quick, I'll just show you what it looked like with the path tool. Go to the lowest point, always. Yeah. So as, let me actually just put that like so. We're gonna put this as bullish. We're actually printing a bearish reversal pattern, which looks like that. This is your most common shift in market structure you'll see, right? This is literally that move right there. You put your high in, you put your high in, and then it breaks. The only thing, well, actually no, we had the body close right here. This was a wick, so it's a false break. SFP, you'll hear it, swing failure pattern, whatever you want to call them. All right, which makes sense. Look at where we are. I've been talking about this zone in my other videos. We're in supply. We're at the volume area high of the range, and we have daily bearish div printing today. 4-hour has some ugly what is it, bear divs, but hourly is what I was really watching. And I was talking about this. We had lower momentum waves. We had volume was getting lower over here, and we had the volume spike that took out liquidity. Excuse me. And then we had money flow coming out as well. I'll drink some. Better. Hold on. Sorry about that. All right. So what's our target? We're going to be targeting this order block and POC of the range. Actually, I'm getting off topic. We're looking at market structure. Sorry, I go on for days. Alright, so getting back onto where we were, because I got a little sidetracked. We have our 4-hour market structure, and it's just broken bearish, right? I'm actually already in that short, been talking about this, and I'm actually going to show you the live examples of even how to apply this. So how do we use this to get into positions? Okay, well, we're going to go down the fractal. I'm going to go ahead and just place my replay tool here, so it'll, oh, there we go. So it'll give me it'll be easier to find our price action. Alright, here we are. So here was the first sign. Oh, I went way too far down, I'm sorry. I don't know why I did 2 minute. Here was our first sign of a shift in market structure on the larger fractal, okay? The 4-hour. So once we see this, we should say to ourselves, okay, well, this is a big move. It's a lot of strength in that, a lot of volume. You know, maybe we're at support and other confluences. I'm going to start looking for longs, okay? Now, you could do a breakout trade, but you're going to have to cover, I think the 4-hour close is somewhere up there. You're going to have to cover all of this. That's almost a 10% stop loss. Your target would have to be 110k, the all-time high, for it to make sense. And that's just ridiculous. This can be improved upon. So here we are now on the 15-minute time frame, and we're gonna see fractal market structure. Okay, let's draw out all the bearish breaks in structure, right? Because we had bullish market structure coming up, looking something like that. Okay, that was our bullish market structure on this smaller fractal. Okay, then we had a shift. That shift happened off of, I'd say, this low here. Yeah, we had a body close. Okay, let's continue to draw these out. We had a body close, or a wick, sorry. We had a body close here. We had a body close here. That's a large move, so that means this would be the last protected high on that smaller fractal. That means on the 15-minute, to see this fractal flip bullish, we would have to see body close above here, in which we don't really get it to all the way over there. So then, if we were to use that as our trade, it's a little better, but that's still a large zone you have to cover, 4.2%. But we're getting there, right? This is looking a lot better. Let's go ahead and delete all these. Let's see if we could go down the fractal even more and see what we find. Let's go down to the 2-minute, 5-minute, 3-minute, 2-minute. Try to stay away from the 1-minute. You're gonna get more wonky market structure, a lot more fake outs. So on the 2-minute, again, this would be your break. You have a body close here, body close here. There's another one there. I'm just not going to draw that. Actually, that would have been a fake out, huh? Came down, up, down, fake out before going lower. Alright, so keep that in mind. We get fake outs even on the 2-minute. Then, here we go. This is really pretty. Last break of structure was all the way down here. You see that? Put in this, had at least 2 bullish candles, and then came back down with body closes. Alright, now we have something. What else is there? This is the volume area low of the range. Wow, very interesting. Okay. Confluence. I wonder if there was any other confluence with that. You know, maybe throw a Fibonacci retracement. That's an ugly one. I guess it'd be more from here. I don't like to pull it from any of these. If anything, it'd be something like that. Maybe the 786. Alright, getting a little off topic. So, we had our bullish shift on the 2-minute market structure. Now, we can look for longs. And we can put our stop loss below this low. Okay. Then we get another bullish break here. Yeah, so because, well, this is really, there's a wick there, so it didn't close, but we did close the body candles above right there. And we did have some more shifts in here. But since this broke, that means this would be protected on the 2-minute. And what happened? It came down and ran it. That's why you don't move your stop loss up too quickly. So once we got this body close right here, that's when you should enter your long. Boom. And you're not gonna start trailing your stop loss just yet. You need to cover all the way down here. Alright? You need to. If you wanted to be extra safe and you're really confident in this swing position, the best move is to actually let's do 15. Right? Loading. Is to stick with the larger fractal market structure. That means these breaks. Those give you the most protected lows. But that would have been, I mean, you could use something like this here, with the reasoning that there's a curvature of liquidity here. Is that not working? This kind of logic reasoning we're going to apply later on too. But you can clearly see this curvature liquidity, and our reasoning would be, if we lose this low, there will be a cascade of liquidations that will take us much lower. Alright? So that's why we would use that as our stop loss. This would be a very smart move. And even if you were to target right here, that's a 2.5 to 1. That's not bad. That's not bad. Especially to hold this out for a swing position. But we also have, well, you could have played it like that for almost a 5 to 1. That would have been very good too, and it actually worked out just great. Alright, so now we've entered our long. How do we manage this position? How do we trail our stop loss? And what do targets look like? Well, let's get rid of that noise. Move this over a little bit. Let's get rid of those as well. So now we're in our long. We're with the trend, the overall bullish trend. We are saying to ourselves, you know, this could be the higher low to make the new higher high. Trend is your friend till the end, they say. This was a 0.5 grab, right? Yeah, we came into the discount zone. This is really good. This is a great position. Okay, so what I would do on a swing position like this, and there's lots of different ways you can go about this, and I'll cover them, but on this first break of structure, you could, you know, limit close there for 25 to 50%. Wouldn't do more than that. And as far as trailing your stop loss, you shouldn't be you shouldn't immediately be trailing it on these lower fractals. You should be watching the larger fractals. Like on the 15-minute here, we can clearly see, let's mark these bullish breaks. You have a bullish break there. Bullish break here. Actually, that's not one. Nope, that is not one. I'll make this a little bigger. We have something here, but look, it got faked out. What a scam wick that is. Took this liquidity, took that liquidity before going higher. Right, it's like market makers press the button to to scam people, to wreck them. All right, so on the 15-minute, we would have, if we were trailing our stop loss up with the market structure, boom, we would have got taken out there. We would have missed a huge position. So what do? Stick to that larger fractal market structure. Okay. Hold this trade out. Maybe if you wanted to, you do break even. Sure, that works. But I wouldn't. I wouldn't immediately do break even. Wait for a really strong break. This is a nice break. You even left a little order block down here. But ultimately, once you break this, just start sticking your stop loss behind the major 4-hour market structure. Don't play around, and you will get much more gains. All right. So once we broke here with the body close, that means this is protected. So if you had your stop loss in that other area, you would move it up to here, or that'd be a good time to go break even. Right, that'd be a really good idea as well. I would not discourage that at all. I would encourage that. Once we had another break right here, the body close. All right, where's your stop loss going? Right there. So now we're risking 1% on our account. We've already locked in 2.5%. Okay, we took 50% out on this TP. It's a 5-to-1, so that means we're risking 1% to make 5%. We took 50% out. That's a 2.5% locked in. Stop loss to break even. Okay. Go ahead and just leave that down there. And now, we did just trail our stop loss. So now we have also our stop loss is guaranteed to give us another little more than 1.5% because it's right here. All right. We'll keep using this to get rid of that. We'll keep using this to get an idea of how much profit we make off this. Let me get that more accurate. So it's actually 2.25% on your stop loss. So we've made 2.5%, and now we have a guaranteed another 2.25%. Okay, so let's continue with this. We had this bullish break here. Okay, stop loss is there. Just kind of ranged for a while, a little SFP, so we're not going to move our stop loss yet. And then eventually, we had the body close right there. So our stop loss is going to go here. Okay, just trailing our stop loss. So now our max, we would make about 2.5% if it comes and knocks us out. That's ugly. Yeah, I would not have looked at that. Let's stick to our 4-hour. We've already drawn out our structure breaks. So it just kept pushing and pushing and pushing. Now, if you come to a larger resistance zone, POC, maybe you took out this liquidity. No, didn't quite take it out. Took out major liquidity here. If you want to shave 10%, that works, but just know that, I mean, that's not a bad strategy, right? Because if you're all the way up here, like we took out that high, large push, just know that if this keeps running, that's less position to close out higher up. right? You're adjusting your strategy. This actually is not a bad idea to take off 10-20% there. But let's say we didn't, all right? We're just using this trailing stop, right? The one TP we took was down here, and we're just going to trail our stop loss and let it ride. That's what it means to let your winners ride. Okay? So the next break of structure was all the way up here, right? We had our break of structure here, we put our stop loss there. That's where we're at. And it rode all the way up, made a high, came down, made a low, and then boom, made another high. As soon as we put in this body close, stop loss goes right there. Okay, so now we have guaranteed ourselves 8% on our stop loss. No matter what happens, if this comes and knocks us out, we had the 2.5% from this TP, and now another 8% guaranteed if it knocks us out. 10.5% of your account off this one trade, and this isn't done yet. Alright, you got another break of structure here. So here we're going to use that reasoning again, that if we if it comes and takes this low, it's going to take that one, right? The cascading liquidity. So we're actually going to stick our stop loss right there. Alright, so that 8% is now turned into, let's just call it 17. I'm blinking. What is that? 8.5? Yeah, 8.5. So this was 16. Yeah, it's not too much more. Alright, so 8.5% now locked in on our stop loss. We had a false break here and then another good break there. So as soon as we got this body close, this is what's protected. Okay. Right. So that is now 9% guaranteed. Again, taking out liquidity, you could look to shave a little, and especially coming into a larger resistance zone, volume area high, definitely look to shave some of the position. And then right here we had our break of structure, so our stop loss would have gone right there. Okay. So that would give us almost 30, so that's 15%. That's pretty amazing, right? This held strong and pure all the way through. 4-hour market structure was king. It took us all the way up. This is actually very beautiful market structure too. You could have rode this making 16.5% of your account. That's insane. What's the time span on this? By the time it would have hit our stop loss, actually, well, yeah, it hit it. I wonder if this 4 hour is going to close under though. That's 1 month. 1 month. That's crazy. To make 17.5%. Right? Yeah, 17.5. You have, you just have a 10K account. Okay. What is that? That's $1,750. That's not bad at all. For just, if you just watch the 4 hour, right? You didn't do anything. You could spend so little on the charts just using this. You know, set your alert above the high. Once it goes off, okay, did the body close? Yes. Trail your stop loss. Done for the day. right? Unless it did it 2 breaks in one day. Oh my gosh, that's so much work. That beats a 9 to 5 every day of the week. Okay. So we have a bearish shift in market structure. Now you could start looking for shorts up here. I mean, I'm already in one. I'll actually now show you how I use this strategy and how I've applied it. Okay? So remember, 4-hour major market structure was right here. And we're watching to see if we close this body below. But I had indications of weakness already, right? We saw the volume area high. We saw the bearish divergences. We saw some fractal breaks in market structure. We had all that liquidity there, etc., etc. I don't think there's really anything going on in CVD. If anything, it was showing short squeeze. I think it was. So I'm going to be watching now this 4-hour close in about 1 hour. This will tell us a lot. Okay. So using fractal market structure. Oh, wrong one. Looks like didn't quite get a body close there. This would be more of our structure, if anything. It's on a 15. I think that's safer to look at it that way. Yeah, 15's fine. So the way I applied it was when we took this low, I shaped a bit of my position. Oh no, my AVAC or Atom position just got knocked out. So same thing, right? Where you know, I trailed my stop loss, it broke market structure, and I'm still guaranteed money. So I just this was the Bitcoin long I closed out, and I did it for 1% of this account, right? So I guaranteed myself 1%. Now I can trail stop loss. So until we close, let's go back to the 4-hour example. So if we close a body here, I'm going to keep my stop loss at break even, because there's the chance in the highly plausible scenario of getting a retest for breaking structure again right here, in which point I'll then move my stop loss down, and I want to see if I can ride this all the way out, because if we look at the largest fractal of market structure, we could be rejecting here, and your major zones of interest are going to be here and here. All right. Actually, if we go to the weekly, you can even see it's more like the monthly market structure, but this could either be the higher high or a shift, right? Or maybe we just get a little wick down there. Be mindful of these things. We start breaking this right here. This is your daily market structure, right? That'd be very bearish. Then you can start targeting down here. Probably range here and go back and forth. But it makes for a good swing short. Ride it till it dies. Just like we did on this long. Well, I hope this helped. This is how I go about my market structure, and I hope that you all you'll backtest this. You know, if you're trading something besides Bitcoin, look for consistencies, right? Certain market structures will be more consistent on different pairs, like on different time frames, I mean, right? So just be careful of your smaller time frame market structure, and always be aware of these larger fractal moves. 4 hours, fantastic, absolutely fantastic. If you stick with that, you should be very good. Well, I hope that you all manage those risks accordingly, and God bless. Stay safe.